the system. Okay. We have discussed ratio analysis yesterday. Fund flow and cash flow we have discussed yesterday. Okay. Cost accounting, this is something very important. That's why I don't want to let without untouching. That's why we'll spend like first 15-20 minutes to finish this. Cost accounting, wherever you have to understand how much you are spending on particular activity, or particular product, or particular system. Okay, you go for a cost accounting. Suppose you are operating into a western region, but now you are thinking to spend your business to say southern states. So before you move southern states, what you like actually when you are operating in southern state, what you try to understand how much expenditure you are incurring to spread your business into southern business, and obviously your intention will be to make sure how much profit you are making from that particular region, whether its cost is more than like whether its cost is less than your profit or not, or whether you are launching a new product. Suppose there is a marginal productivity, you have already 10 products and you are trying to launch 11 products. So what you will see what cost I'm incurring on launching 11 products. Maybe you will think that no, anyhow I have a distribution channel, I have a manufacturing unit, I have a human resource for all the 10 products. So even if I launch 11 products, maybe I don't have to incur any extra cost. Okay, in terms of fixed cost, maybe there will be some kind of variable cost, but fixed cost is already there. I'm spending huge amount on that first 10 parts. So it doesn't matter if I launch 11 products. So you calculate their cost accounting, and finally you will decide whether to go for 11 products or not, whether there is a demand for 11 products or not, whether the revenue which I'm getting from 11 products is more than the cost which I'm incurring on 11 products or not. So there are various decisions you can take about a cost based on cost accounting, whether to go for a new product or not, whether to enter into new region or not, whether to continue the existing product or not. Okay, or where are the where is the variance? Like you have planned for cost accounting in certain way, like you have planned this will be a cost for a particular product, but ultimately when you went for the actual production, you may have seen there is a difference in the final outcome. So obviously you will go back to the process again, and you will see where is the variance. So there is a typical process for cost accounting. You will see in one of the slides what is the process of cost accounting. But the most important is why we need to go for a cost accounting. Okay, cost accounting is a particular account where you will see how much cost you are incurring on particular activity. So cost accounting is a formal system of accounting for cost in the books of accounts by means of which cost of production and service are assessed and controlled. See, in general, for those people who are not from a commerce background, they are getting issue with understanding what is actually cost. Okay, cost is your landing price. If your landing price in the sense, suppose you are manufacturing or you are into a tea business. Suppose you are having a tea stall. Okay, a simple example. So tea stall you have calculated that to make a tea I need a half a liter milk, that is 20 rupees, and maybe I need another 20 rupees for buying a tea powder and another 20 rupees for sugar. Hypothetically, I don't know whether it's exact measure or not. So ultimately you are spending 60 rupees, or maybe you calculate 10 rupees for gas and 5 rupees for utensils. So that is 70-75 rupees. And ultimately you have found that if I sell the 75 rupees of tea, I am making say 120 rupees. Okay, by spending 65 rupees, I am making 120 rupees. So we come to know that 55 rupees is my profit. Okay, here you try to ascertain every possible cost which you are incurring, maybe rent. Okay, every will try to calculate everything. So this is the cost of tea will be 65 rupees. Okay, the cost of tea will be 65 rupees, but the revenue which you are going to get from that tea is 120 rupees. Okay, so cost prices on what cost or what price I am getting this particular item. Like suppose there is a retailer will say I am getting a particular goods at 50 rupees and selling at 60 rupees. Okay, so 10 rupees is my profit. That is 20% is my profit. So for him, the cost of that good is 50 rupees. Okay, so cost is whatever you are spending or whatever expenses you are incurring to get that product. That is your cost of product. Okay, and whatever price you sell that product, that is your selling price. Okay, and the difference between selling price and your cost will be your profit. Okay, this is for those who don't know what is cost. Okay, cost means the price paid for something. So whatever price you pay for something, that is your cost price. Okay, cost ascertain is computation of actual cost incurred. Okay, cost estimation is a process of predetermining cost of goods and services. So you many a time you estimate, like suppose tomorrow you have decided that you want to go for online education. Okay, so before you go for online education or before you decide your pricing strategy, obviously there is one method, cost plus income, cost plus target, that is cost plus profit. That means you decide your pricing based on what is your cost and you add your profit to it, and ultimately you prepare your plan. So take an example. Suppose tomorrow you go for say online education. Okay, and you have decided that you want to provide animated video like Baiju or an academy. Okay. So what you will do, you first, like before you go for a plan or before you actually make your financial status or your forecasting, what you have to prepare a cost estimations statement. So how you prepare your cost estimation? Suppose you have calculated that to launch any online education which is based on animation, you required suppose three softwares. Okay, X, Y, Z, three softwares you require, and the cost of three softwares is 10 lakh rupees. Okay, you required high configuration laptops or computers, maybe 2.5 lakh rupees each. That is 5 lakh rupees, so 15 lakh rupees. Then you will calculate your marketing cost, how much you have to spend for digital marketing or offline marketing or news print media marketing. If you have high budget, then maybe TVC. So whatever television spot. So whatever is your budget you make about advertisement. Again, you have to hire teachers. So maybe you make a plan for how much money you have to spend to hire a teacher, how much money you have to hire to have a professional who can create animated video. Okay, maybe a rent for a studio or office. So there are various expenses you have to incur. The moment you calculate the expenses, you will come to know initial investment what you have to put into a business. Okay, once you come to know maybe that is 25 lakh rupees. Okay, so once you prepare that 25 lakh rupees, now what will be your next target is to recover that 25 lakh rupees. So how you are going to recover that 25 lakh rupees? Obviously by collecting a fees. So now comes a challenge how to decide a fees. So here your cost estimation statement will help you to decide your cost, to decide your price. Okay, so suppose there is a 25 lakh rupees that you have expected. This is going to be a cost. So now when you decide a price and you have calculated based on your forecasting that you will get around 10,000 students. Okay. For example, you have calculated that from all India, if you launch this website within a year, I'm going to make 10,000 students. So that means what will be your cost? Your cost per student will be 2,500 rupees. Okay, 25 lakh divided by 10,000, you will get 2,500, 2,500 as your cost per student. So obviously, based on that, you will make your pricing set. Like what is your kind of business you're entering. Suppose it's a profit oriented business. Obviously, you will go for 5,000 rupees, 6,000 rupees, 7,000 rupees. That is like because if you look at the competition of what prices we are having now for online education 7, 8, 10, 12. Okay, you can see it's nobody is providing at a cost less than 25 to 30, 25 to 30,000. So you have a freedom here. But when your cost statement is not ready, definitely you will not able to reach out to understand what profit you are going to make or what expenses you can allow to incur. But if your cost estimation is ready, I hope you understand the importance of cost estimation with this example. So once your cost estimation is ready, you are in a much better place to decide your pricing strategy. Okay, maybe you have realized there is a huge profit. So obviously, what I can do, maybe I have not included TVC into it, or maybe I have not included YouTube advertisement into it. So I can add that because 2,500 cost is very low. Maybe I have the capacity to go for 3,000 because people are ready to pay 6,000, 7,000 rupees. Even in that condition, this is going to be one of the cheapest options. So if I'm going to charge 6,000, 7,000 rupees, so definitely I have a scope to increase my expenditure. So maybe I will increase some expenditure on YouTube, and maybe by increasing that expenditure on YouTube or TVC or whatever you can do, maybe from the 10,000 student I can go to 15,000 students or 14,000 students. So So ultimately, per cost will further reduce. Okay, so this is importance of making a cost accounting. See, no, it's not about making a cost accounting. Cost accounting is definitely made by some expert, but being a manager or being an accounting management team, a part of accounting management team, what you will do, you will make out what is the utility of this cost estimation and how can we manipulate or how can we change in our favor this particular statement. Okay, this is about the cost estimation. Okay, again, it is about estimation. It is about the forecasting. But this forecast is again based on certain logic, again based on certain facts. It is not a guess. There is a difference in guess and forecasting which we have discussed in earlier session. Okay, so I hope even for those students who are not from accounting management, they are making sense from these statements or whatever we are studying. Because it's not about we have to understand what is accounting in detail. It is something where we just have to understand how to use those accounts which are made by experts. Okay, or those who are into experts into accounting. Similarly, when we start MIS, you don't have to fear that I'm not from IT background or I am from a commerce background or I'm from a science arts background or I'm from engineering background. You don't have to worry about a computer system or you don't have to worry about information technology. What we have to understand, information technology is already there. We are not going to prepare, make any software or hardware. We are going to use already established software and hardware just to process data or to reach at a decision making level. Okay. So again and again, I'm focusing on things. Don't go into any kind of technical jargons. What we are interested in, how to use those things. Okay, like we have taken example yesterday. You are a hotel manager. Okay, you are not a cook, so you don't know, you are not supposed to know how to make a biryani. Okay, what you're supposed to know how to sell that biryani. Okay, what should be your selling story? How to manage your expenses? How to ensure that you make a better profit? Okay, irrespective of whichever role you are, maybe you are into finance, maybe you're into sales, maybe you're into marketing or logistics, whatever way, wherever you are, whichever department you are working, the only job you have to do is value addition. Okay, or to ensure there should be like why we are adding value to ensure there should be higher profit, there should be higher customers. Okay, there should be a more satisfaction to your customer. Okay, customer delight. So your job is to use resources. Your job is not to create resources. Okay, so even if you are not from a commerce background, don't worry. You are not supposed to be from commerce background. Okay, irrespective of whichever background you are, you have to understand how to utilize whatever knowledge you have. Okay, don't focus or don't give much time to understand the basic principles. Try to see okay, how like you have understood the concept. How can I use this concept or how can I use this cost estimation method to make a better profit or to have add value at your department? Okay, like I'm focusing on this thing because in last one-to-one session I have realized there are many people who are saying, we are not good at accounting or we have never studied accounting in our 11th, 12th, or we are from a science background. So obviously it is not expected that you should have a better knowledge or you should have a knowledge about accounting. You should understand like whatever we are covering here, just read those chapters from our notes and try to understand the basic concepts. Even if you understand 20-30% of that concept and whatever we are teaching here, even if you are understand that those concepts, you are enough to write or to understand what is required from you from accounting management. It is just introduction, like we have discussed or we have like you must have read so many places that you are not expected to be expert into one department. Okay, you are a jack of all department but expert in none. You are a jack of all department but you are expert in none. You have idea about logistics, you have idea about marketing, you have idea about the finance, you have idea about accounting, you have idea about IT, you have HRM, you have idea about everything. You know what is the utility of these departments in your particular job profile, but you are not expected to understand what is IT or how you create software, or how you create a language or coding. You are not expected to know these things. Similarly, in accounting, it's not expected that you should know how to balance a figure or how to put entry into particular statement. How what is a double entry effect? What is a single entry effect? This is not expected. I am from a commerce background, so maybe I know more jargons, but obviously this is not useful or that is nowhere asked in MBA. Okay, maybe if you are going for a financial management specialization, maybe again you are going to have a completely different kind of study or syllabus. It's not about the core syllabus which you learn in 12th, 11th, 12th. Okay, so the need of for cost accounting. Cost accounting provides detailed cost that management needs to control current operation plan for the future. See, once you know that you are incurring expenses or these are using softwares, you are incurring, like same example, incurring on a teacher on your expenditure advertisement, and suppose that is going out of your budget. So what you can do, obviously, you can find some of the way to reduce the cost. Either you can go for a lesser software, or you can go for initially you can go for renting of software, or initially you don't hire so many teachers, or you will go for a free advertisement. So whatever way you can manage your expenses or control your expenses, you will go for that. And suppose expenses are comparatively lower than what you can spend, or what is your capability, then obviously you can increase your expenditure on, maybe you will go for higher quality of softwares, or maybe you will hire employees who have experience, or they are from a top companies of competitor. So there are various ways you can either increase your efficiency by increasing cost or expenses, or you can decrease your efficiency, or manage your expenses in a certain way which you can manage. Okay, so once you prepare your cost accounting, you will be in a better position to take a decision about the future and the current operation. Okay, how much you have to spend, how much you have to save, obviously how much you will going to spend in the future, or how much money you are going to make in the future. So this is a utility of cost accounting. So companies must control cost in order to keep price competitive. Obviously, if you like, there are we have discussed, there are various ways, three ways of increasing efficiency. Going back to same basic principle, but this is very important. That's why I keep on repeating. Like, I think I have repeated this two to three times. But again, there are three ways of efficiency. One is increase your output. Like, ultimately, you want to increase your output. Decrease your input and keep same output. Decrease your input but keep same output. Increase your input, increase your output. And third one is keep input same but increase your output. Keep input same but increase your output. So what we are talking here, companies must control cost in order to keep prices competitive. So cost is what? It is input. Okay. If you control your input cost, then obviously you will be able to have a better competitive price. So if you have to apply this cost accounting principle into a farmer society, okay, this you can apply. Definitely you can apply. Once you understand a core concept of cost accounting, you will definitely apply this to a farmer society. See why farmer suicide has increased in recent period. Okay, it was like, it's not that agriculture was always having a better income. Obviously, agriculture have always suffered because it's a core issue related with primary industry. Okay, it's not like a secondary and tertiary industry where you make a huge profit, where people are ready to pay a high amount. But primary sector, which is primarily based on providing raw material, they have always faced some or other kind of slowdown. But still, why people are committing suicide in last 10, 20 years, or like there is increase in percentage or increase in number of people committing suicide? Because due to green revolution, there is increase in input price, or there is increase in cost itself. There is increase in cost itself. Like after green revolution, like most of the people are now going for a foreign seeds. Okay, or they are going for a high cost pesticides, fertilizers. Okay, why? Because obviously if they don't go for this thing, their production will not be know competitive, or that will not be enough than those people who are using those resources. So nowadays what people are doing, they are going for a higher cost manufacturing, like they are buying high quality seeds, or no, of fertilizers, of chemical, pesticides. So this has increased their input cost. Since they are not in a capability to manage that increased input cost, what they do? They go for debt. Saukar, like they go for a money lender. Okay, they go to money lender. They take a loan on very high interest rate. Since they don't have a land on their name, there is something called a land reform. There is issue with land reform, so they don't get loan on their land, because that land still belongs to grandfather or great grandfather, and this person are no more, and they have not divided that land among themselves, because that again ask for some kind of charges. So that land still belongs to somebody in a family who is no more in a, no more on earth. So what they do, they go for a money lender. They go to money lender instead of going for a banking system. So obviously that further add cost, like cost of capital. Cost of capital means whatever capital they are bringing into their activity, that also has a cost. That is interest rate. They are what interest they are paying, and that is very high interest. So the cost of capital is very high. Input cost is very high, and ultimately what return they are getting, they are not as per the requirement or as per the demand. Okay, but initially what used to happen, they used to use seeds from their old their old crop, and obviously that was more dependent on organic farming, okay, cow dung and other kind of resources, jaggery and other kind of resources which are easily available at local level where they don't have to spend money. So obviously cost was very low. Okay, since cost was very low, they don't have to go for a debt. Since they don't have to go for a debt, obviously whatever production they have, the requirement was less. That was enough for their sustenance. Okay, that economy or that agricultural activity was just to survive. Okay, it was not to have a surplus income. So that led to, like, social cost was very low. Okay, now everyone wants to go for a hall for their daughter's marriage, or everybody wants to have at least basic facilities at home like sofa, television, okay, refrigerator. So social cost has also increased. So this led to increase in farmer society. So if you calculate, or if you can calculate cost accounting of those farmers, or any family which can make a cost accounting for themselves, definitely they will not incur this much cost which which they will not be able to manage in future. Okay, that can save many farmers' life. Okay, this is just a one logic. Maybe I'm completely wrong into it, but just to understand the importance of cost accounting, we have just quoted this example. Okay, I'm not saying this is a ultimate solution, but this is just one of the thought process. In today's global environment, cost information is more crucial than ever in human competitive. We know in a global competitive age, somebody who can provide a product at a cheaper rate of the best quality, those people will going to have better success rate. Like why we are not able to compete with China? Obviously, economy of scale. Okay, they're costing. Since they are since like we have taken example of Button Town yesterday. Okay, Button Town where they are world's 90% of buttons they are making in a one town. So just imagine the kind of orders they will have, the quantity of orders they will get. Okay, maybe they are getting a order of buttons, a normal button which we always neglect, or we have never thought about this can be a business. So just by manufacturing of buttons, maybe yes, they are getting a order in the lakhs. Okay, whereas our people or Indians are getting order in thousands. So obviously we will never be able to have a raw material that cost. We will incur a lot of a fixed cost which cannot divide between 1,000, or whenever we divide between 1,000, obviously that will be very high. But if I have orders in lakhs and I have to divide the same fixed cost, obviously per button the fixed cost will be very low. Okay, that is what we call economy of scale. If larger the order, lower the cost. Larger the order, lower the cost. Same example, when we go for printing a card, if we give an order of 1,000 card, they will have a different price. But if you go for a 5,000 card, obviously that will be more cheaper. Okay, why? Because there is a fixed cost, like fixed cost in the sense, creating a material, okay, or creating that word, okay, on offset printing. That offset printing, creating a word will incur some cost. But once you create that words, okay, whether you go for 1,000 printing or 10,000 printing, it doesn't have any variable cost. Okay, the only cost which you add is the paper and that ink. So obviously, if you go for a more number of cards, price will be very low. So similarly, this is called economy of scale. So here, in today's global environment, definitely cost information is very, very, very crucial. If you can decrease your cost by some or other way, like if you can control your input, obviously your output will be more productive. You will have a better competitive edge. Once you get that competitive edge, you will get a bigger order, and further you will achieve economy of scale. And there will nobody will be able to compete with you. That is what happened in China now. Even US cannot compete, or most of the developed nations cannot compete with the secondary industry of China. Maybe. Maybe like there are people who can compete with them in tertiary industry or primary industry, but as far as secondary industry is concerned, nobody can compete with China. Why? Because they are very good at their cost information. They are able to reach to that level where they can control their costs compared to others. Compared to others, it's not that we cannot make Diwali light. We can make Diwali light, but again, most of the people, Indian people, buy a Diwali light which is manufactured in China. Why? Because of costing with 50 rupees or 60 rupees, they are giving such a big light. Okay, like forget about the quality and everything. Okay, it's not that they can't provide quality, but they know there is a customer base who are looking for this kind of quality because anyhow they know we are going to use it for only 1 or 2 days. So why to spend 250 rupees or 300 rupees? Okay, it's not that they don't have that quality. They are also having a quality of 300 rupees. But what we people import for 50 rupees quality? Why? Because there is a higher demand for this particular price range for it. So this is what we understand by cost accounting. So finally, just to sum up, what is difference between financial accounting, cost accounting, and management accounting? We have studied financial accounting. We have studied just now. We have studied costing accounting, and in the last lecture we have discussed management accounting. So what is the difference between three? Financial accounting record transactions and determine financial position of profit or loss. Okay, in financial accounting, imagine at a top level. Imagine a top level. We have one statement which is talking about your financial status, whether you are in a profit, whether you are in loss, how much assets you have, how much liabilities you have. Okay, where you go for a cost accounting, a certain allocation, accumulation, and accounting for cost. Okay, how much cost you are incurring on your daily operation, how much cost you are incurring on particular product, how much cost you are incurring on particular activity. That is about the cost accounting. Okay. A management accounting to assist the management in decision making and policy formation. So you use different accounting statements. You use different accounting statements. Maybe it's a cost accounting, financial accounting, okay, trial balance, or various accounting statements you use to make certain analysis from that data and to present that data to top management to assist them to take a proper decision. Okay. So management accounting, use of accounting to make a better analysis, to make a into inform data into information and then information into knowledge, so that the top management will be in a better position to take a decision. Okay. Financial accounting, imagine top management looking for a financial status of organization, whether we are in profit or loss. Okay, what is our asset level, what is our liability level? Cost accounting is finding a cost about a particular activity, whereas management accounting is again helping a management to take a decision by presenting accounting statements into a simpler language, or into a tabular form, or into easily understandable form. Okay, or converting that into like data is what? Data is spread of a lot of information. You have to collect data, you have to present it to a proper way so that one can make a meaning from it. That is information. And once you analyze and make some statements which is useful statements for yourself, so that is ultimately a knowledge which you can apply to make to make a better output. So that is information, knowledge. So here management accounting is converting data into information, providing that to management, where they can convert that into knowledge and can apply those knowledge to ensure a better output. Concerned with historical data, obviously financial statement is what top management is looking at last year's financial data. Okay, so it's a historical nature. So, but cost accounting is both past and present. You are interested in a past cost or like past cost accounting. How much cost we have incurred on this particular product and how much cost we are supposed to incur in next year. How can we control our cost? So that both things are related with cost accounting. Management accounting deals with projection of data for the future. Okay. So whatever data they are providing to senior management, that is for taking decision for future. Okay. Financial accounting was the past, management accounting is the future, cost accounting is both past and present. Okay. Principle followed, governed by GAAP. Obviously, government has a control on it. Cost accounting, certain principles followed by recording cost. Okay. No set principles are followed in the management accounting. Obviously, management accounting is to present something in an understandable way to management. So maybe there are no principles. That is depend on your customized requirement. Okay. But in cost accounting and financial accounting, obviously there are certain rules you must follow. Like in financial accounting, you have rules prescribed by government itself. because there are many outside stakeholders who are going to believe on your financial statement, and they are going to make a decision, like either investment or something like whatever decision they have to make in a tax correction decisions. So there are many things which government is to decide based on your financial accounting. So obviously we have to follow certain principles. Okay, data use qualitative aspects are not recorded. Okay, qualitative aspects in the sense quantitative and qualitative. Qualitative are those aspects which are in a number, whereas qualitative aspects which are more of a words. Okay, maybe that having your own subjective understanding, whereas quantitative aspects are your objective aspects. Okay, so objective aspects are those which cannot be manipulated, or those are facts. Okay, those are facts which are there and they can be seen similarly by all the people. Okay, they can be seen similarly by all the people. Whereas qualitative aspect can be different from a different perspective. Maybe something which I can see from a statement, maybe you will not be able to see, or what you are saying, maybe I will not be able to see from that perspective. So there is a scope for qualitative and quantitative aspect. But in financial account, there is no scope for quantitative aspect. It is only about the number, or it is only about the objective criteria. Okay. Only quantitative aspect is recorded in cost accounting. Obviously, here only quantitative is recorded because we are not interested in quality aspect, because cost is about a factual information. It is not based on qualitative. But management accounting uses both qualitative and quantitative aspects because it is about futuristic approach. Okay, it is about futuristic approach. You understand, okay, in a budget. Suppose you are presenting a budget. Okay, you are presenting a budget to government, or you are presenting a budget to finance minister, saying that, okay, saying that, sir, this is a plan for next year, or this is what we can do for next year. Okay, here you have an expenditure of say 100 rupees. Okay, there can be a various ways you can analyze the expenditure. One is something called a revenue expenditure, and another is a capital expenditure. Okay, so capital expenditures can be capital expenditure, like I think I have given this example in some class, that there are two friends, both are having 100 rupees. Okay, and at the end of the day they said, like, we have spent 100 rupees, but somebody, like, there are A and B. So A has said that I spent 100 rupees to buy a clothes, or to buy a shoe, or to watch a movie. Okay, or to buy some refrigerator or something like that. Okay, they spent something for the purpose of fun and entertainment. But there is person B who says that I also spent 100 rupees, but I spent 100 rupees to buy say silver. Okay, so obviously both the people are with a zero money in their account, but there is a difference in their expenditure. So you have to understand what kind of expenditure you are talking about. Like in a quantitative purpose, you will see both have spent 100 rupees. But in qualitative terms, you have a different approach towards looking at it. Somebody A who have spent 100 rupees, obviously he is not going to get anything as a return from that expenditure. But the person B who has spent 100 rupees to buy a silver, obviously he can sell that silver at any time and can get some revenue benefit. Okay, so there is a difference between qualitative and quantitative expenditure. So in terms of corporate, how it means a quantitative and qualitative concept. Okay, suppose there is a Baiju who shows that till 2017 they were in a loss. They started their business in 2011, but till 2017 they were in loss. So they were in loss. That doesn't mean they were not in profit. Okay, there is a difference. Okay, so why they are saying that they are in loss, because they have not achieved their break-even point. So why they are not achieved their break-even point? Because whatever profit they are making, they are reinvesting it. So what I mean by they are reinvesting into it means they have bought office in Bangalore. Okay, maybe they have bought many softwares. Maybe they have hired a lot of people. Okay, to serve their business. Maybe they have spending lot on advertisement. But whatever money they are spending on advertisement, that is not from their pocket. That money already they have received from customers or students only. So that means what? That means they are spending on qualitative concepts. They maybe you will see that they are spending, but their spending is on something from where again they are going to increase their business. Okay. So management accounting needs to have both qualitative and quantitative concept to understand maybe we have spent the money, maybe particular entry is showing in the numerical terms, but what is the utility of that particular term or what is the meaning of that particular term? Obviously, to understand that you require both qualitative and quantitative aspects. So this is a basic difference between financial accounting, cost accounting, and management accounting. Even if you remember this particular side, I'm sure you are done with most of the part in terms of financial accounting, okay, or in terms of accounting management, okay. Like because most of the time, whenever you discuss with somebody, you will go with this kind of words on management accounting, cost accounting, financial accounting. At that time, you should be in a condition to make sense from what somebody is trying to say. Okay, maybe you will not understand the particular how to make a trial balance, but once you somebody use a trial balance, you should be in a condition to understand what I understand, what is the meaning of trial balance. Somebody is saying a ledger, somebody is saying a journal, you should be in a condition that okay, I know what is journal, what is ledger, what is trial balance, what is profit and loss statement, what is a balance sheet, okay, what is a budget, what is financial accounting, cost accounting, management accounting, revenue expenditure, capital expenditure. So we have used so many terms. They are conceptual in nature. So just to try to understand these concepts, being a manager, don't try to be an accountant. Okay, there is somebody who will manage that thing, and ultimately you will get a prepared statement. You have to just analyze that statement. Okay, okay, it's better if you understand even how to make a costing or how to make accounting, because that will add more clarity to your knowledge. Maybe you can even find out or you can make out the mistakes which are made by accounting. Okay. But again, that is something where you can trust on others when you can't prepare accounts now. Okay, it is something where people have spent their 3 years of graduation to understand those many terms. So definitely, I think if you look at input-output ratio, like which we have studied in yesterday, ratio analysis. If you can apply ratio analysis here, how much input I'm giving, maybe I'm giving this 5 to 6 hours for that particular understanding, or maybe I'm giving 6 months for that. But what ultimately you are going to get, you are not going to get the same returns. So better I should spend that 5 to 6 hours more to understand more concepts, to understand more of the management work. Maybe I should understand more of solve most more of the case study, should read more about the companies which have applied some of the financial accounting principles, cost accounting principles, management accounting principles, rather than spending time for something which is not very useful. Okay. Objectives of cost accounting. I don't think we have to explain now objectives of cost accounting because I'm sure you have understood what is cost accounting. But still, to determine cost, obviously, you make a cost accounting to understand what is your cost. To cost control, if you have think that something is going beyond your budget, obviously you try to cover or you try to find new sources to ensure that you reduce your cost. To provide a decision making information, once you have a cost accounting in front of you, you can make a various decision. Various decisions and price making decision, whether to go for a particular vendor or not, or whether to go for a particular activity or not. Can we increase our budget? Since we have a surplus income, so you can take a various decision based on your cost accounting statement. To determine selling price, as we have said, cost plus profit will lead to selling price. So maybe this is one of the method where you are incurring a cost, you can add your profit to it and you can sell at particular price. Cost reduction, obviously once you have a cost, you can find a variance, where we have crossed our expectation, or where we are incurring more cost than it's supposed to be. Here you can apply your technique, or you can find alternative sources, or you can increase or you can ensure efficiency in that particular activity, and you can reduce the cost. Okay, so this is about again the final the standard costing process. The gather information, set a standards. Okay, okay. So before making your cost accounting, you collect information. How much expenditure you are making on each activity. You state your standards. Compare actual performance to standard and prepare performance reports. So compare what is actually expenditure you are incurring, and also make a statement about what you have planned. Determines which variance to invest. Like you have to find out where you have a gap, like expectation and reality, where you have a gap. So you will once you find that variance, investigate the cause of variance, determine if corrective action is needed, take corrective action. Okay, so this is simple process we have discussed in like, while we are discussing about costing process. But here you have something, one slide. This is about costing or management accounting as such. We are done with all the 5 units of accounting. Now we are going to discuss a next subject, that is MIS, Management Information System. Okay, so MIS, again, before we start, just for those people who don't have any information technology background or IT background, we are not going to enter into any kind of technical knowledge. Okay, so just remember, you are a manager and you are there to use MIS. You are not there to prepare any kind of software. You are there to use a software or system which is already available for your user. It is not something which you are going to create. Okay, it's very good if you have some IT background. Definitely you will be in a much better condition to work in this system, or you can think about specialization to MIS. Okay, but somebody who doesn't have any background, or they are planning for marketing, finance, or operations, something like that, definitely they don't have to worry about a core knowledge of IT. Okay, so let's start our next subject, that is management information system or information technology. Okay, management information system is a computer-based information system which is basically concerned with processing data into information which in the communicated to the various departments in an organization to support the operations, the management, and the decision making function in the organization. Okay, so maybe the definition is very large. We will discuss one case study. We'll discuss one case study to understand what is MIS and what is actually application of MIS. With this case study, you can imagine or you can visualize what is actually a role of MIS in system. 2010, 2010. Okay, GSK has accepted one or placed one system, or that is SAP software. We have implemented was one SAP software, like the ERP, International Entrepreneur Resource Planning. So there is one software, SAP. Okay, this is what we have implemented into our system. So we will see two kind of or two eras. That is before we implemented the particular system and after we implemented the system. What changes we have observed, or why there was a need to implement MIS into the system. Okay. First of all, like before we actually implemented MIS system or SAP software, what was our status? Our status was everything was everything was on paper. Okay, everything was on paper in the means. Suppose there is a sales team. Okay, there is a general manager, there is a branch manager, there is a regional manager, there is an area manager, and there is ultimately executive. So there was a chain of a sales team. Just for the sake of understanding, and like we are discussing only about a sales team, a role of sales team, or role of MIS for a sales team. So before we adopt any SAP software, what we used to do, everything was on a paper. That means a sales officer or a sales executive or the salesman, they used to go to market. They used to take all the orders on a paper, and they used to put or they used to submit that order into a computer manually, and ultimately a distributor used to take out the goods in the evening, and second day morning we used to distribute that goods to market. This is what happening on a ground level. But the people who are sitting above the executive level, they were not aware about what is happening on the ground level. So they used to trust whatever they got information from sales executive on telephone. Okay, first thing, there was no real information. Real information in the sense same time information. Real information, that doesn't mean false information. Real time information, that means they are not getting any information on real time. That means they are getting information about a particular event after it has happened. Okay, so yesterday my secondary was this much, or this much was my achievement. Okay, and once something has happened, there is nothing you can do. This is just a postmortem. Okay, you cannot save the patient now. So this was having a little utility. Okay. Second thing, whenever marketing team, like it is about sales team, whenever marketing team was to communicate something to sales team, obviously there was no data to justify their action, or there was no information to support their future planning. Okay. So obviously most of the future planning or most of the actions which they used to plan, that was again based on their experience or their own understanding. It is not supported by any factual information. Or it was not supposed like it was not based on any ground reality. Okay, so that was the situation. And again, there was no data about human resource, like how many people we have, how many people are actually working. Okay, how many customers are there? What is the feedback of customer? So there was no provision. And obviously, since they used to take on a paper, many times they used to lose paper, or many times they used to issue with a retailer that you have not mentioned this drug and you have sent in this drug, or there can be n number of issues which are related with manual work. But one day, like GSK has decided, GlaxoSmithKline decided that we want some kind of SAP software which will share a real-time information to everyone, which will share real-time information to everyone. Somebody who is sitting on a top level and somebody who is working on a ground level. They will be on a similar level when it is concerned about information. Okay, so we implemented software where there is a computer. Obviously, every computer will have a software at a distributor point, and the salesperson who is going to market, they will not take any notebook or they will not go on a paper or they will not note any order paper, but they will have a handheld device. Okay, so there is a handheld device which will ensure or which will be having a connection with the distributor point till the top management. Okay. So the moment you punch particular order, obviously in real time, a distributor will get a message about that article. Okay. So maybe the salesperson is doing a market from say morning 10 o'clock to 6 o'clock, and then he will come to office at a 7 o'clock, and then he will punch order by 9 o'clock. Maybe he will not be able to deliver the stock on a second day. Maybe second day morning he will come back and he will take out the order which salesman have collected, and then he will deliver it on next day. So maybe second or third day you are getting order. But here what is happening? The moment the moment like on that retail shop itself, the moment he punch order, distributor will get a message that this is what order we have received. Okay, they can take out the stock. Second benefit of SAP was, suppose like this salesman was not aware about how much stock we are having in a godown. Maybe they take order, considering that if order will be like if stock will be there, customer will get a stock. If order will not be there or stock will not be there, customer will not get the stock. But this makes a negative impression. अरे भैया कल तो आप order लेकर गए थे, आया नहीं stock. Sir, stock नहीं था तो बताना चाहिए था stock नहीं. I have taken order from my retail customer, and he has to show a face to him. So just to stop this, this information gap, we have a real-time information. Even salesman will come to know, like the moment he finds suppose a 2 Horlicks bottle, and he'll come to know that there is no stock. He can tell the retailer then and there only, sir, 1 kg bottle nahi hai. Can I put 500 mg bottle, or can I put 200 mg bottle, or can I give a 2 kg bottle? Okay, not kg. Okay, so you can grammage, or you can ask a different. Either you can give him alternative, or you can directly say, sir, this stock is not available. So there will be a transparency in communication. There will be a opportunity to share direct information with the retailer. Okay, that will create a more trust of a retailer on your sales team. Okay, this is one function. Second function was, obviously real time information is there. Early delivery of good will happen. That will again create a competitive advantage. That particular distributor or particular company gives stock immediately, or maybe you can deliver stock on same day itself. Like you can divide it into two periods, like 10 to 2 and 2 to 6. So those people who are giving you order before 2 o'clock, they will get delivery on the same day, and those who will give order from 2 to 6, obviously they will get tomorrow early morning. So there are two ways you are increasing efficiency. You are creating a transparency among your people. You are building a better relationship with outsiders, that is a retailer or other stakeholders. Retailer, they are also able to build better relationship with their customer. Okay. Second thing, you will have information about how many outlets that salesperson has actually visited. Before that, you were just dependent on that person. Okay, if he's saying, sir, I visited 40 outlets. Okay, you have to trust. You have no other option. But now you have a GPS in your software. You can study how much time that person has spent on particular retail outlet, how many outlets he have actually visited, or those outlets which he's saying in there, these outlets were closed or that person was not available. He has to actually click the photo of those outlets. So obviously, like maybe they like something which is nobody likes to have this minor surveillance. But again, just to show or just to have a fear among a sales team, you can launch such software. So you can use such softwares to continue that fear or to ensure there is a better authenticity from the salesperson. Okay. So obviously there was a clear data or there was a true data. The moment you are clicking or you are punching order, obviously it's not only your distributor, but your top management will also get information. Once they get information, they can make a strategy based on suppose this particular article is not moving or this particular activity is having a higher demand. So obviously what they can do, they can connect with a manufacturing unit or logistic team. They can say, sir, this item is getting much better space in a market. So obviously, what we need a more manufacturing this stock for next year or next trimester. So what we can do like next quarter, not trimester, next quarter. So what we are trying to create a more transparency. Okay, there will not be any shortage or there will not be any surplus stock. Since something is not moving, marketing team will come into place. They will see, okay, this particular article is not moving. So what we can do, we can run some advertisement on it, or we can run some scheme on this particular product, or we can give a 5 rupees of sachet free on this thing, or some or other kind of activity you can run for those items which are not moving. Okay, or maybe you can reduce your expenditure on those items which are already moving. Okay. So there's a help for marketing team. They will get a real time data. Okay. This is a real time data. This much of unit we have sold from Tamil Nadu. This much of unit we have sold from Maharashtra. This much of unit we have sold from Orissa. So we can analyze the trend, and based on the trend, we can take a direct decision. And those decisions will be based on actual or real information. This is not based on somebody's guess. And there is, since it is based on some real data, obviously these things have a more or certain results. There is no space for uncertainty. Okay, this is just a one case study, and in fact, it is also helpful for a salesperson. They will come to know how many outlets or how many outlets they have visited, how much incentives they have made for this month, how much is a gap to reach to a next level of incentive making program, or how much order they have received from particular outlet in last visit, how many visits they have given in a month. So they can inform to retailer as well, sir आपका 10,000 हो गया है. If you can reach to 12,000 rupees, like that's already 10,000 rupees, if you can reach to 12,000 rupees, you can make a better profit or you can get to next level of skill. So somehow you are helping your market, you are helping your salesperson, you are helping your distributor, you are helping a top management, different departments to make decisions. So it is actually a win-win-win situation. Nobody is in loss. The only thing is initial setup cost was high. Maybe initial like buying handheld devices, implementing the softwares, uploading softwares into a computer. Maybe the team which is visiting those distributor points, or initial training or initial issues with the distributor like BNE or I, BONI or I, or maybe there is a low battery backup for handheld device. So there can be initial issues will be there. Like you will face a resistance from your team for implementing those programs. But once you are done with those challenges, obviously what you will have a better prospect in the long term. So this is a case study to understand utility of MIS. Okay, I still remember there was a case study given to me while I went for a Marico interview, Marico parachute oil interview. So they have given me a case study that you are into a business, and like that case study was something similar to GS case study only which we have discussed just now. But they were saying that there is lot of wastage, and the shelf life of the product is very low or very less. Okay, the shelf life means the product has a shorter period. Maybe this is eatable item. Okay, maybe this is gulab jamun. Okay, or a bakery product which can be there for only 3 days. Okay, or 2 days. And due to this process, like order taking, punching order, then actually going for a delivery, that is taking a lot of time. So what kind of solution you promote to reduce the wastage? because again going for expiry, it's not 100% loss. It is actually 120 or 150% loss. Why? Because first we have spent a money to deliver that product to retailer, and now we have to spend the money to take out that stock from retailer to a distributor, and then you have to burn that product or you have to destroy that product. Okay, so there is a huge cost involved, and obviously it will demotivate your employee. It will demotivate the retailer. You will lose you will lose confidence from marketing. Okay, people will not trust on your product. अरे यार इनका बहुत experiment करता है. Okay, so this is what we say. You know, taking out expiry is not 100% loss. It's actually more than that. Okay, you are not just losing your cost of manufacturing, but you are losing more than that. So here again, like the answer lies in MIS. Okay, if you have a MIS system or if you have some kind of real-time information sharing platform, then obviously you can reduce your wastage. Okay, there were so many things into that case study. It's not only about distribution, but there were some case studies stated that retailer is giving order, but he's not getting order on time, or he's not getting the desired quantity. Sometimes distributor sends stock from his own, like something which he has not given order, but still he gets order or he gets that stock. So they are complaining about a distributor, like distributor sends the stock without their information. He's not sending without their information, but there is an issue in writing order, or there is an issue in understanding that order by distributor, or maybe there is some issue in a writing. So these issues can be solved with MIS. I hope this case study was input to imagine what is MIS, what is a role of information system, why you need some of the softwares, computers, okay, some of the important emerging technologies like DSS. Don't worry, we are going to discuss what is DSS, what is export system, what is ERP, latest system that is ERP. Okay, according to my knowledge, ERP is recent. Maybe there is something which are more recent than ERP, but there are various softwares, there are various systems which you use in MIS to ensure there should be a better and there should be accurate implementation of system to have a better customer base. Okay, so let's study a management information system definition now after understanding this case study or discussing this case. Management information system is a computer-based information system which is basically concerned with processing data and information which is then communicated to the various departments in an organization to support the operations and the management and the decision making function in the organization. Okay, so now this definition will make more sense, like converting data into information, communicating with different departments, supporting the management for taking a decision, and informing to other departments to take a better decision making function. Okay, this is about a basic definition of MIS. So again, MIS is divided into three parts, that is management. Okay, management information system, or MIS, broadly refers to a computer-based system that provides managers with the tools to organize, evaluate, and efficiently manage departments within an organization. Okay, it provides you information, it provides you tools to evaluate, efficiently manage departments within the organization, like we have seen the example of sales team. So obviously management now have a better control on their team. Okay, whatever tools they have, the sales tools, the selling story, the stock, whatever the promotional activities, whatever activities or tools they have, they can organize, evaluate, and efficiently manage departments within an organization. Okay, so MIS comprises of three things, that is management, information, and system. Okay, the definition of management, information, and system we will see in a next session, because again we have to discuss management separately, information separately, system separately, and again we have to revisit the definition of MIS to understand how different words are helping towards a synergetic action. What is synergetic action? When 1 plus 1 is not 2 but 1 plus 1 is more than 2, that is synergetic action. The result of two things or more than two things is more than their individual sum. It's called a synergetic action. Okay, so how these different things comes together, management information system, and how they leads to a synergetic action, that we have to see when we are discussing MIS definition which we'll see in a